Hello, traders. This is Michael coming to you from GammaEdge on Friday, April 11th, with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model, which is based on the tick index. You can search any of your favorite investing websites to get an overall understanding of what the tick index is definition. In short term, basically, it's buying versus selling within the overall market, and we add a time component to it, time series, to get us a overall trend of what is occurring in the market and who is winning the battle, buyers versus sellers. So the takeaway from this is our bolded CTU. This is our aggregated buying versus selling here within the overall intraday market that we continue to look at. As you can see, previous days we've had a significant downtrend indicating that sellers have been in control in the overall market for multiple days and weeks. We did have a short reprieve here for a previous day where the bolded CT did start to cross back up when we saw some sort of short-term price appreciation, but that failed very quickly, indicating that sellers came back in and took control of the overall market and continued on yesterday. Draw your attention up here. This is our breadth indicator, new highs versus new lows. You can look back previous days, new lows were significantly outpacing new highs, indicating more stocks were being sold than bought. Yesterday, it was a little bit more flat, but again, give the edge slightly to the sellers as the red was above the green there for the overall day. Drawing your attention to this cyan line here, this is basically a filtered cumulative tick, aggregated. This is filtered via plus 1,000, minus 1,000 large block order transactions. This would most likely be institutions or large players within the overall market. Being below the zero line just indicates that there are more larger orders being transacted to the downside, which is indicating via selling via those large market participants. So you continue to see that selling continues via those larger market orders, indicating that sellers maintaining control. And this is our cumulative tick here, just aggregated, just another view, understanding if we're living below zero, there are more sellers versus buyers in the overall market. So again, we maintain that bearish stance heading into today, that sellers are still in control of the overall market. Moving on to the SPX-A. These are our larger out in time positioning with the overall market structure. As you see, these are monthly expiries. Most likely these are institutional money or larger players. Again, in the overall market, structure maintains put dominated above and below spot price. We do see some greens popping their head out here. But largely, again, we maintain the put dominated structure and put dominated above and below spot price. This basically takeaway here is that put speculators are maintaining control of the overall market. It will be difficult for a significant price appreciation unless we see a overall change within this market structure. Previously, these were completely green, indicating that call sellers or call speculators were in complete control before this major downtrend that we took. So again, put dominated, put speculators are in control. Price appreciation will be difficult at best, at least on this structure. Moving on to the SPXP, all expiries turned on. These are our shorted data expiry contracts, daily, weekly, and monthly. Again, talking about the lack of upside speculation, you see negative net delta here. This indicating that in the money puts are maintaining control above spot price, and those speculators are not really relinquishing their holds at all. We do see some thawing below spot price, as you see these red negative net deltas turning a little bit more green. Again, this is the first step of providing an overall floor or a lower structure that the market is able to cushion those downside shocks to. So we'll continue to watch this. A large transition is indicated by our white box here. So again, high volatility, expected move is up there at 3.44%. So again, getting pushed and chopped around is extremely likely for the overall structure. And heading into today, we do have this double strike at 5,300, 5,310 overhead. We believe that's most likely going to be difficult to push above unless we see a significant amount of out of the money call speculation today. And then we have this strike up here at 5,350. To the downside, we'd watch the 5,200 to be a supportive type level. If we get below 5,200, we'd obviously anticipate some more weakness in the overall market heading down towards 51.50. So we'll continue to watch that DEX transition here. Obviously, that area will be extremely important for the delta transition. If we get below, that would indicate most likely more weakness heading to the downside, as I said, towards that 5,200 level. Heading on to the SPXP 0 DTE. This is our DEX transition we've outlined here. It's extremely wide, also basically indicating that expected move is 1.8, 181 points. So with the DEX transition this wide, you really don't have an edge to trade against. Obviously 5,300 and 5,200, that is a 100-point spread, so really not likely for us to be able to find areas to trade against. We do see little areas that could provide some stalling or price action, which would be supportive or resistant, depending on if you're above or below. Moneyness matters, as we always say here at GammaEdge, and whether those contracts become in the money or out of the money. So we'd be watching 52.50 for a short-term area for price reaction, and to the downside 52.25 and 5200 we've already spoken about. And into the upside, we have a hodgepodge of areas with exposure above spot price there, indicating 5280 and 5300. So we'll continue to watch those areas as we head into today. Looking at the delta balance history, this is basically just indicating who is in control of the overall structure above and below spot price. We like to separate those, but indicating the SPX did have a short-term reprieve where we did see some put speculation degrade a little bit, but then again, on out in time, you'll notice that we do see a downward slope in both of those planes above and below spot price, indicating we do not have a significant amount of call speculation to the upside. As we just spoke about, the net speculation to the upside is just not there to have a major price appreciation across the board with structure and sentiment. Moving on to the SPY, it looks slightly better than the SPX, living above the zero line for the delta balance, indicating we do have some short-term call speculation coming in. But on out in time, the green line, which is your right-hand plane, that's above spot price, which is your net call speculation, is still maintaining below zero. So again, to have any sort of major price appreciation, we would need to see this cross above zero, indicating that the out-of-the-money call speculators are coming in and putting risk capital risk at work. QQQ looks slightly better than both the SPX and the SPY. We are living above that zero line, which indicates that call speculators could be trying to exert their overall force and control. Delta balance living up here at 1 on out in time indicates that call speculators are coming into the queues. Obviously, that would be that would make sense as SPY, Apple, IWM, or SPY, Apple, Mag 7, all of them are in the QQQ. So moving on to the net stat command, this is basically just telling us our highest sensitivity levels for the day, indicated with spot price forced at 52.98, but as a pre-market will most likely be below that. So we'll update that for our members. 5200, obviously the downside, we labeled that.
Hey, I don't think anyone's talking, right?
That's extremely important. And then 56.25, 53.50 to the upside is the areas we'll be watching. So moving on to our trade station. Again, I've outlined those areas for today, 5200, and then basically 53.25, 53.50, and 5300 to the upside will be those important levels to watch. So net takeaway is bearish stance on the overall market trend model. Speculators are really not coming into the market in force to provide a significant price appreciation to the upside. So with that, everybody make it a great day, and we'll see you later. Thanks.